Hello and welcome to episode 2 of our bi-weekly technical analysis with some of my former students. Today Colin is driving back from being a refugee from Hurricane Milton, and so he is not present. But we have Mitch, who, because he is an industry insider and has a compliance department, will not be on video with us today. Say hello to the audience, Mitch.
Hey, how's it going, everyone? Thanks for having me, Coach.
All right, so it has been a wild and crazy 2 weeks. I mean, things have been whipsawing back and forth and going around. I asked Twitter and Substack which names people wanted us to look at for this week. I have those marked in blue here, as well as the things that we had covered last time. Still with our past rankings, might have to update. Mitch, because of the just incredibly aggressive action in uranium names, wanted to jump right into uranium. So do you want to start with Energy Fuels, Amir Adnani's
Let's
company? What
start
is
with Quad U,
Quad U? All right, Energy Fuels.
Energy Fuels.
There's
Yeah,
something about this company that the CEO. It's almost like he's I don't want to say anything too mean, but it's either a little bit autistic, or like the entire market is just screaming like, talk about uranium, and then every earnings call he's like, I want to tell you about monazite. We're going to be a world leading rare earth monazite processing, and like everybody on the Q&A session, everybody's begging him like, we're hungry to hear about uranium strategy, and he's just like, but have I talked to you about monazite yet? And there's something kind of like, I feel like at least I know he's not trying to take advantage of us by pumping uranium when everybody's hungry for it. But they are ramping up to a 2 million pounds a year of mining uranium run rate. But anyway, what do you see in the technicals, Mitch?
yeah, and just to build off what you're saying, as much as I like the rare earths too, I think there's great potential for increasing usage, but any pure play over time is going to outperform. And that's actually pretty conducive to my analysis on Quad U. So since September, uh, 425 up to almost 7. The all of commodity, the uranium stocks have had a pretty similar chart uptick. But notice with this one, compared to, we're going to look at LEU and UEC next. Look at the 50-day and how that's acting. So it's only slightly upticking, right?
The 50-day is this
Whereas,
the blue line.
yeah, 50 days, the two is the bottom line. So before this, we had a pretty strong downtrend of lower highs and lower lows, right? And we have some pretty major resistance at 8. If you zoom out a little bit to the 3 year.
Yeah, I can do that.
So yeah, you see, we have there's some pretty strong resistance even here, just from the that last rally to 7 that failed, right? And if it could have gone above that 200-day and held it, there would be a chance for it to continue rallying, but it rejected. So that means it's strong resistance, right?
Yeah.
And so 7, this is definitely a area to watch. And if it does break through, I've identified this $8 range, right? So if you were to draw a line across, you actually can with the annotate button, but
Yeah,
yeah,
I'm not very good at this, but I can
that's
try.
okay. So yeah, so hit Control, and that'll give you a straight line, I believe. Yeah. So yeah, see, with resistance and support, it's strengthened by how many times there's inflection at that point, right? So you can see that even going back to 2022, let's call it August, it bounced right off. Then it continued back in November. It And then when it rallied right before it, at the end of 2023, it couldn't hold that area. So if the rally does continue, my exit for this position would be $8.
Okay. So there's a chance it won't even crack through this. I mean, there's a chance it bounces right off 7. Even if it breaks past 7, there's a strong chance it bounces right back off 8. right?
Right. And as we're going to see once we look at the other ones, uh, pretty much everything is at this major resistance point right now where it's either going to, continue rallying and break through this resistance, or it's going to fall and revert back to the mean, right? But
Okay.
the difference with quad U, right, is look at, all this past history. It has so many layers of resistance ahead of it, right? And now I want you to switch over to LEU.
This one has had just the most amazing run up, even just today. It's pretty
Yeah,
incredible.
this one has the best, recent strength. And, I'm going to bring the attention back to the 50 and 200 day. You have the golden cross right there, right?
Should I go down to 1 year so that's a little more
Yeah,
visible?
we could start at the 1 year. But the 3 year did show the important top that I wanted to highlight. But we'll start here. So my feeling is that the pullback from 67 to the middle of the Bollinger Bands at around 57, that might have been the pullback to get in. If this trend is to continue, that might, the Bollinger Bands are also, strong support and resistance as well as the middle point. So that's usually somewhere that, I would be comfortable buying it, if you're trying to catch an inflection, but it always can, fall. But yeah, it's outside its upper Bollinger Band, which means, it's more than likely going to pull back. But momentum's crazy. So you saw, the RSI, it got hot, and I, conventionally would have told you to sell, when it last hit, on the earlier rally. RSI got hot, it was at the top of its Bollinger Band, then it pulled back. We're at the same situation right now. So this might get a pullback. And the other reason I think this might have a pullback, right, is on that 3 year chart, you have all the way to the left, you have a top. And we're slightly over the top. That top's at around 85, 86, right? So we are through that, but that doesn't necessarily mean that it'll hold. We kind of need to see what it does. But different than quad U, there's no more resistance after this. If you even back up a little further, we're at an all-time high right now, right? Which means this thing could keep on ripping, So
Yeah.
if the move in uranium continues, I think this could be, a strong play. But even stronger, I think, is UEC.
Really?
Yeah.
Okay. That's a surprise.
So it has, similar setup, right? Could you start on the 1 year, and
Yeah, I
then
can
we'll
do
move
that.
back to 3 and 5, or maybe not even 3 for this one, but 5. So yeah, this one has had, a little bit what I think is a healthier chart, right? It's kind of bounced back to its previous levels, and look at that inflection in the 50 day, right? That
Okay.
shows you, that's catching up quickly, right? So if there's going to be a cross that's coming, it's going to be coming sooner than later with this one, right? And it's currently sitting at its past, resistance. So this is another important level, right? But if you open up the 5 year,
Don't know if I can do five. Let me see. No,
yeah,
I,
you
I
can do
can do
5.
five. There we
This has
go.
just had a consistent grind higher, which is something, I like to see in charts, that it's able to, go up, consolidate, keep moving up, because nothing goes up just straight up and down. But if it can, kind of almost like stepwise, it can go up, consolidate, and just continue that pattern. It looks like it's continuing to do that. And the last few times that the 50-day moving average uh, crossed over the 200, look at the rallies it's had, right?
Yeah.
So I think that if the uranium play is going to continue, this is the best play. It offers the most upside, um, compared to, so LEU has, run way more. So it has, less of this rally already built in. And similarly, it doesn't have any more resistance above it, right? It just, the critical point is right here. We're at this, double top on the 1 year, right? And that's the same situation as LEU. So I think, they're going to be correlated, right? If one does good, I think the other is going to do well too.
Yeah, and there's just been
It's
a
really more
huge.
dependent on. Oh, sorry.
There's been a huge volume of positive news for uranium. I think it's first Microsoft and then Google and now Amazon have all announced that they're going to build nuclear power for their data centers. Now that takes years. So I think one of the things that there's definitely going to be pullbacks between now and then, because just the build out of nuclear energy is, 3 years would be fast. And the stocks are running up now on all this positive news, but earnings are so far away for most of these companies. But
Yeah, agreed. And because of that, you can kind of trade it rather than just, long-term bag hold it. You can ride this wave up, figure out when you want to get out, try and time it. And then, as you said, it's going to take years for the build out to actually happen. There's just hype and momentum and buzz around it right now. So, take advantage of the rally. You want to be in it right now while it's hot. And as we saw with, some of our other growth trends this year, if uranium's the next one, it could just keep going. You've seen, like in the last month, it's had a NVIDIA-like chart.
yeah,
So I think if the uranium momentum is to continue, this is what I would want to own.
Okay, so when I was analyzing the fundamentals of this one, I kind of hit a brick wall when I was trying to get a read on the CEO. And you remember when we were looking at Red Robin Gourmet Burger last year, and I was listening to earnings calls, and I was like, oh yeah, that guy is a swindler. This is a short.
Oh yeah, I found that one at like 16 at the top. I called that one out as a short because
Yeah.
it's just terrible management. And I haven't looked into their management quite the same. So if you don't like their management, I mean, the fundamentals are a totally different story.
It's not that I don't like him. I mean, the CEO, Amir Adnani, he's really out there moving and shaking and making deals happen. So just as far as the evidence of what he's accomplishing, it's really good. Just when I try and get a read on his character, it's like I get nothing. It's like he's totally off the radar. I don't get any good signals. I don't get any no green flags, no red flags. I just can't even get a read on him. So that was the reason why I think I went more into energy fuels. I have a small position in UEC, but on the margin, I've been adding more to energy fuels. But I'm known to fall into value traps. But yeah, I mean, UEC, he's out there and he's doing accretive deals. Sometimes they're dilutive, but they're usually accretive and dilutive. So he's really making a lot of things happen, getting processing plants turned back on, having mergers. He's getting a pretty impressive amount of deal making done. So it doesn't surprise me that this is the best setup.
Have you seen the uranium commodity price lately?
I think I can.
I don't know if you can pull it up on stock charts.
I can pull up the Sprott physical on stock charts and go back to the 1 year.
Yeah, well, I have it on Trading Economics on my screen right now, and the point of what I'm trying to say is the commodity price hasn't really moved all that much.
Yeah, I can pull it up on Trading Economics also. Let me just get the somewhere here.
So I think that's interesting because, typically when we see demand surge for a commodity, the commodity price surges too. And that's not really the case here, which makes me think, this may end up being a short-lived rally.
Well, the problem with uranium is that it's such a small market and there's so many long-term contracts. There we go. This one, the 5 year, the 1 year.
Yeah, I think the 1 year tells a better story because it had such an insane run-up that, it kind of doesn't really show you what's been going on lately. It had that huge run-up, over 100, and it's kind of just been normalizing since then. And it's good to see it, not continuing to fall too bad. But it's not rallying the way that you would assume.
So the thing about uranium is the power companies maintain usually around a 5-year inventory of fuel for their nuclear reactors. So if they feel that the prices are going to come down, they can wait. And that makes, and also they can engage in long-term purchasing contracts. They'll go to Cameco and say, hey, we want to buy this much a year for 10 or 15 years because they know how much their nuclear reactors use, and they can buy exactly that amount. So the spot market is spot market's really not always accurate, but it's yeah. So you have the spot market, you have the futures market. It's a really tough one, and it's hard to know what's going to happen and how fast. But the fundamental deficit with different countries building out, with different supply disruptions. I mean, the market's in a deficit. So anyway, the fundamental setup is good, but to see that reflected in the price in the spot market, this is a really, really, really strange market with very few producers, very few buyers. They're on both sides maintaining an inventory and being selective about when the inventory is let onto the market. They have long-term contracts that can roll off. I mean, uranium it is not anywhere near a liquid or efficient market by any stretch.
Right. And I think that's a really good point that you made about, miners and, the companies that are selling uranium. They're not necessarily able to capitalize off increases in the commodity price.
Yeah. Well, that's one thing. So back to Amir Adnani and Uranium Energy Corp. Is he's keeping all of his production onto the spot market. They're not engaging in so many long-term contracts. So that's he's being very smart. I just have a hard time reading his character, and that's just a failure of my radar. I'm not trying to slander the guy, but he's done a lot of very smart things.
Yeah. I think I'm ready to move on if you don't have anything else.
Okay, so as far as uranium goes, you'd put short term, you'd put UEC at top of the charts.
I like UEC, but I think you can get pretty similar value out of UEC and LEU, but Energy Fuels I think is the weakest of the three, just because of all the resistance it's going to face.
Yeah, and that makes a lot of sense because I'm attracted to it, and I'm generally attracted to things that are not doing well.
Yeah, I mean, listen, a fundamental value perspective is going to differ from a purely technical perspective.
At the end of the market day, the Google Finance is doing a thing where the spreadsheet's not updating very well. So, all right, where do you want to go after uranium? There was a lot of enthusiasm to get into some of the core positions, even though we didn't cover them last time, because the purpose of these streams is more to talk about, as I get a little money every week from rolling puts, what to be buying this week. But we didn't look at the technicals yet of any of the core positions, even if they're already full.
Yeah, there's just one stock I want to look at before we get into that, and that's SoFi.
SoFi, okay.
Because they have, interestingly, had a very similar chart to the uranium rallies and whatnot. And I think it could be potentially a double top. You see that from December 2023. Yeah, it failed to break through 10 last time, and you're already seeing it start to consolidate here. I mean, this very similarly to all the uranium rally setups. You got overbought RSI above the Bollinger Band, but you also have the Golden Cross, right? So this is a name that I like, but I think it's at a very crucial point right here. And if you can scroll out to the 3-year, I think we have the potential for two different sorts of technical patterns setting up. And it really could go either way, because it's the funny thing about technicals is, it can go bearish or bullish so quickly, right? So bullish, this could potentially be creating a cup and handle, right? So you have, it might even be helpful to pull up another tab and just get a image of a cup and handle chart.
Let's see. Just do a. I did have some requests from some of the viewers to explain things more thoroughly, so that's probably a good idea.
I'll try to do that a little bit. So on the 1-year chart, you don't really see the run-up as much, but you have that coming, the bottom of that.
Which one of these pictures do you like best?
Any of them work, really. Then they all yeah, that one's good.
Investopedia.
So you can see it. It's got that. Yeah, so start considering it as where like March on this chart, right? It's going down, but then it is making that cup, right? We're at the resistance point, right? Where that 1 year top at 10. And I think that it could potentially, consolidate down and then break out, right? That's
Okay.
one possibility, right? So I would be interested in that in case of a pullback. But on the other hand, I might be wrong and it might be a bear pennant. So you take a look at what a bear pennant looks like.
Okay.
So a bear pennant is when something drops, it starts to, go up with higher highs and higher lows, and then it breaks down out of that trend. It fails to, failing to break the resistance in the pennant causes continued downward momentum is pretty much how the bear pennant works, right?
Okay.
So it really could be either, but I think the fact that we're at the top right now, that $10 price, if you see it start to pull back, maybe look, could you pull back the SoFi chart?
Yeah, I just wanted to. Sometimes I'm not very good at technicals. I'm even maybe less good at psychology. But my understanding of this is people that bought in on this rally when there was so much enthusiasm. You have people who bought on this day, and they're just saying to themselves during this entire drawdown for the cup, they're saying to themselves, if it ever gets back to this price, I'm going to sell it because I would be happy to break even. So when it gets back to that price, you get all this selling pressure from all the people that just for this entire period, for 6 months, for a year, they're saying, well, if it ever gets back to the price I paid for it, I'm going to sell it and be happy with a break even. And that's what causes this handle pattern, is the selling from all the people who said, if it ever gets back there, I'll sell it. And if
right. And technicals are entirely behavioral psychology. It's why do people act the certain way they do? When it hits a certain point, people are going to act a certain way. And even if people only act that way because everybody else is, it's still a pattern you can follow.
So
right?
People that bought in on this massive rally in November and December of 2023, right? There were people that bought in at 10, and they've been waiting a whole year now. So there's been a whole year where they're saying to themselves, if it ever gets back to 10, I'm going to sell it and be happy to break even and forget about SoFi for the rest of my life. And
right.
and
so
that's,
could you go back to the 1 year?
Yeah.
So yeah, trying to identify, potential support where this might fall. I think, the it looks like 850 range. That's where you had, you have the middle of the Bollinger Band, like I said earlier, that also acts as support, and you have the top from the last rally, as well as the brief area of consolidation. So I'd say the 850 range. If it were to pull back tomorrow, I wouldn't buy maybe until it hits, a little closer to that range, or, keep up with the chart and see where the middle of that Bollinger Band moves to. But yeah, I think this could definitely be a cup and handle starting to form. And I mean, fundamentally, this company just gets better every time it reports earnings.
Yeah, that's true. This is one I did want to add to. Now, so there might be some amount of time where it's kind of forming this consolidation handle. We might have a few weeks here, but yeah, the company's getting better, and also so most of my readers for the Substack, I definitely have a thesis for long-term sustained inflation and have a strong emphasis on commodity super cycle, revenge of the old economy, oil, gold, and land. But I'm really starting to suspect there might be a couple-year period here where we see these small-cap tech stocks rally, have a revenge of Cathie Wood. So just on the margin, I want to buy right now as much small-cap tech as I can. And this one is definitely, I want to add to it, but I'm typically pretty bad at timing.
I'd be cautious to add here at 10, but it's definitely something that, I think we should revisit it in our next call.
Okay. Absolutely. So we'll put SoFi at this unknown, could go either way, yellow sign. You want to go ahead and
go into the core positions.
Yeah. So the core positions, there's a lot of heartache right now on the offshore drillers. So there's Transocean. which has just been on a steady march downward for the last year, where I think it topped out around 8. So last time, yeah, it was almost 9, and it's just been this grind lower for a year and a half. People are getting pretty dejected, and they even had a new contract with a higher day rate, and just nobody cares. It's really there's a lot of heartache right here in the offshore driller space.
And even though fundamentally, like you said, they have all that backlog and they have increasing day rates, but I think this is just a story of the industry and the momentum right now around energy, and drillers, refiners. They pretty much anyone you look up is going to have a similar chart to this, and this is not a chart I would feel confident buying. As much as I like the company, I don't. It's a strong downtrend with consistent lower lows. There's no sort of inflection in sight. The moving averages are still pretty far away, and they're continuing their downward motion. There's no indication that makes me want to buy this.
So this could be the very first higher low, or it could be a trap.
Yeah, I think it's quick to call that a higher low. I would want to see a higher high before that, and the last 2 higher highs double topped and fell. So
yeah,
I think this is going to continue going downwards, at least until there's some broader change in the markets feeling towards this sector.
Okay, and let me put the other oil name I have up here, Vermilion, because I bet it looks the same.
Yeah, same chart.
Because all the oil names are correlated.
And if you throw up NFE, that's probably the same exact situation.
Now, NFE, well, maybe even worse because of all of their.
That's worse. Yeah.
Yeah. And I know you told me that this chart had no downward resistance, so don't buy it yet. I didn't listen to you 100% on that. I'm still trying to learn to listen to the technicals. But I had to buy some. I couldn't not buy some. But yeah, it looks like, at least for now, it's stopped falling. It's been kind of bouncing around the $9 range. Yeah, for now it stopped falling. Well, we'll see, because there's catalysts on the very next earnings call when their EBITDA is supposed to go from 125 million to 175. So we'll see. That doesn't always. Every time I try and time a catalyst, the market does not always go the direction I think it's going to go. It usually goes the opposite direction.
Yeah, it's hard trying to, earnings catalysts, they're binary options, so it's a little bit hard to be event driven like that.
Okay, so oil is still, from a technical point of view, no man's land.
Yeah, I would say so.
And then the next time we meet, we'll do a kind of a more of a macro sector rotation talk, and talk about, everything going on in the world and why maybe fundamentally that might be different, but technically it's pretty bad. Medical Properties Trust.
Now, this is a chart that I like. So let me tell you what I see here, starting with, 2024, right? In the beginning of the year, you've got this, this bottom, and that inflected, right? Had a really strong run up in February, consolidated, continued running up, consolidated, continue running up. And notice how every time it's bounced since, really since the start of 2024, it's just moving along these moving averages, right? Which means these moving averages are becoming really strong points of support and resistance, right? And that lets you know that, this just bounced off the 200. That means it probably was a good entry, right?
Okay, so there was the Golden Cross in June, give or take, started June. You have it bouncing off of the 50-day, crashing. We're spending a little time below the 200-day, but for the most part, when it bounces now, it's
recovery right back.
Yeah.
As you see, it was really only a few trading days that it was under, and usually, if something's in an uptrend and it dips below the moving averages like that, that's usually a buying opportunity. Yeah. And also take notice of the RSI at the dip. It hit the 30 point, which there and then recently, right?
Okay. So this last bottom at around 430 something, 440, that seems like that was a really good entry point, at least near term.
Yeah, near term, that seems like it was a really good entry point, and you got the higher highs, right, from these rallies, even though they're consolidating and pulling back. I
Yeah.
think this could be a continuous grind higher.
Yeah, and that matches what's going on with the fundamentals. So I wrote on my Substack about how the bankruptcy process of their largest tenant is pretty much wrapping up. Now I don't know when we're going to get all the details, and there's still loose ends to tie up. But yeah, this is at least one chart is bullish, and this is my largest position. I'm really looking forward to having something to exit and to recycle some capital. So I'm really looking for that selling opportunity. I've kind of promised myself to reduce the position by about a third when it reaches a certain threshold.
Yeah, so not for your needs, but for the viewers, I think that this could be a good opportunity right now.
Yeah, it's still time to buy because it is good odds that it'll climb up to make a new higher high. So from $5 to over 6.5 would be a nice run up.
And you're also starting to see the MACD, it's starting to inflect. So that's another thing to look for.
That's
the MACD is a lagging indicator, so it's not as useful. But you can, use the. So you see how it kind of, it starts small, then it gets really big, and then it gets small again. So when it gets small, that's usually when it's about to inflect.
So
right? And that
the MACD getting small. What do you mean by that?
So yeah, you've got the two moving averages, and then you have the histogram, right? So when the histogram kind of converges, similarly to the moving averages, right? When you see a convergence, that's usually an indicator that there's going to be some sort of inflection, right?
Okay.
MACD is an indicator of direction, right? So it's not necessary, like the RSI tells you if it's overbought or oversold. This doesn't really do so much. It kind of shows you, where the direction is going to keep heading. So, yeah, so when I guess the volume of the bar is the way I would say it. Once that starts to shrink and it goes from, peak to, almost flat before going, positive or negative, you can assume that there's an inflection. So this histogram is starting to shrink in the near term.
Okay.
So
as it gets back to zero, that means it could get really poised for a big spike up.
Yeah, but it's a lagging indicator. So if the stock starts to move, it's going to move before the MACD tells you anything. So that's why I try not to rely on, any one indicator alone. But, the MACD is especially, a supplement rather than something to base your trades off of.
Okay, one oil name, it's in oil services we didn't talk about though, is Profrac Holding. Is that still the same terrible chart?
Yeah, I mean, this is less no man's land. I don't think this one is going to have its bottom fall out the same way all the other ones look like they have the potential for, because this is, looking a bit more range bound, consolidating. I'm sure if you opened up go a little bit further out, you'd probably be able to see. Yeah, I mean, that's not a great look.
Yeah.
That huge gap down and then just continued dropping. And you see back in like August, right? You had that attempt of a rally where it went over right there.
Yeah.
Where it went over the 200 and then it just fell. That is not really a good sign. But yeah, I mean, I think this is more likely than not going to follow the same trends as the other oil stocks, but probably a little bit less potential for the bottom to fall out.
Yeah, on the fundamental side, I think the market really hated an acquisition. So right now the market's punishing any company that's doing a debt-fueled acquisition. But the acquisition they did was Permian-based, and right now a lot of people are talking about...
What do you think that is? That the market doesn't like debt-fueled acquisitions?
Well, I think the narrative is just that small cap stocks have a debt maturity wall, which for most of them isn't even really true. It's the averages of the debt maturity wall for the Russell are blown out by a couple of fallen angels. So I think one of them is DirecTV, DirecTV is a
Yeah, I
small
think
cap
Dish,
now
right?
because it's a fallen angel, but it has like 20 billion of debt. So if you average all the companies in the Russell 2000, this one massive outlier had like they had $20 billion due in 1 year, and the average made it look like the whole Russell 2000 had this massive debt maturity wall. And not every company in the Russell 2000 really has that much of a debt problem, but the narrative I think has really been small caps are in trouble because of rising interest rates and their debt service payments. But interest rates never really rose that high historically. I mean, small caps borrowing at 8 or 9% is very historically normal. There's nothing bizarre about that. So
Right,
the interest rates rose, but they rose to benchmark, Fed funds rate of 5. They didn't raise to benchmark Fed fund rates of 12. So the
right, right.
the the narrative that the small cap stocks, all need to delever, and every small cap stock that's not delevering is dead in the water, and their stock price is going to go right into the toilet. I think that's eventually going to prove to be a buying opportunity. It hasn't been so far, but now that interest rates are being cut globally, maybe the attitude towards these debt-fueled roll-ups will change. But more fundamentally, the other basins like the Haynesville and the Bakken, those have been slowing down, but the Permian has been staying strong. So on their revenue, their earnings, by doing a Permian-based acquisition, they should have stronger revenue in the quarters ahead. But anyway, this
But
is
yeah,
more to
just
talk
one
about
more thing on
technicals.
that. I'm, more so against a dilutive acquisition than a debt financed acquisition because I mean with the inflationary environment, the debt is losing value
Yeah,
in in real terms. So
that's
I
my
don't think,
thesis.
if it's a good acquisition and they're able to integrate it. Now that's always the hardest part is integrating the acquisition, right? But I don't necessarily view that as a bad thing. And, I think that potentially is an opportunity to buy if the market, views it as something so detrimental. I don't think it's that at the end of the world.
Yeah, and that's my thesis both for ProFrac Holding and for Alta Equipment Group. They're both doing debt fueled roll ups. They're buying great businesses, they're integrating them, they're increasing revenues, and the market just hates every single step of the way. Um, and again, the long term sustained inflation, if that's what plays out, then when you go to repay this debt 10 years from now, I mean, what is a value meal at McDonald's cost? $12. I mean,
Yeah.
it's just a different time to repay the debt. But there was a case of so there is it's like this unicorn where it's theoretically possible, but management teams are just so pernicious they never do it. So Henry Singleton of Teledyne was known for he was able to do accretive stock-based acquisitions by buying companies whose PE ratio was lower than his own. So the market liked him. He traded at a very high multiple. He was able to do accretive stock-based acquisitions of his competitors who were trading at lower multiples. And it looks like maybe Amir Adnani of UEC is doing that. He's doing accretive stock-based acquisitions. They're very rare, and it's very hard to trust to see if management is doing a good job because the normal course of events is for management to screw over shareholders. But it is possible to do value-added stock-based acquisitions. Just it's very rare. So ACDC is like the king of the one-legged man in the butt kicking contest as far as energy names goes. Let's look. I had a request for both Sibanye Stillwater and for Peabody Energy, and I think platinum might be breaking out, but I don't know if it shows up in the Sibanye chart yet.
Yeah, my issue with Sibanye, the same thing I was talking about with energy fuels, is any company that's not a pure play just isn't going to fetch the same type of premium multiples, you know.
Yeah,
Um, but I mean, this is a pretty flat chart. Looks pretty range bound, and I don't know what platinum's doing,
yeah.
but gold's
I can
going
jump over to
insane.
platinum. Yeah, gold just broke I think 2,700 an
Yeah, it just
ounce,
broke
and
27.
let's see, gold broke $2,700 an ounce, and then Sibanye Stillwater owns 50% of DRD Gold, and then they have their own kind of high cost gold mines as well. So platinum, um, it's not descending anymore,
Hmm.
and then
Yeah, it looks, pretty much like it's just consolidating.
palladium
But
is the killer though, because palladium is more commonly found as a byproduct and so it's a byproduct
Oh,
of
it's
Nornickel,
in the toilet.
of Russia's nickel mining. So Russia's been emptying their stockpiles of palladium and crushing the price. Now, maybe this is a sign that the bottom is in palladium and it can start, but who knows? But yeah, this price crash in palladium is not just because we're in a so on the demand side, catalytic converters, the automobile market has been soft ever since interest rates rose. And then on the supply side, Russia, to fund their war in Ukraine, has dumped their stockpile of palladium, which they get as a byproduct from Nornickel. And that's why
See,
the Go ahead.
that's exactly what I'm talking about. The problem with anything that's not a pure play commodity. The stock price isn't benefiting from gold rallying,
Yeah.
right? Even though they have all this gold, the market doesn't treat them the same way.
Yeah, so there is so as a value investor, I do fall for that trap, the conglomerate discount. That companies, there might be a lot of business there, but that entire business trades at a low multiple because it's a conglomerate. And
Yeah, because it just for like institutional buyers, right? If they want they want exposure to gold, they're not going to buy something that doesn't follow the price of gold, right?
yeah,
And like you said, these companies that are conglomerates, they trade at a nice discount, but sometimes there's a reason for that.
well, it means that the hope for multiple expansion is pretty slim. But if they're generating fat cash flows but trading at a low multiple, then what they do with those cash flows might end up. So Sibanye-Stillwater has outperformed their peers, Impala Platinum and Anglo American. And part of that is because you've got this conglomerate discount on the multiples, so it means you're be able to buy more cash flow for the same dollars, and they've been taking that cash flow and buying more assets. So it's sort of a mixed bag. So if you're buying these impure companies, you kind of have to know what you're getting into. That you've got this conglomerate discount, and that multiple compression might never go away unless an activist comes in and tries to split up the company. I mean, just the components. So they've got this platinum recycling company, which within it, which is very large and it's U.S. based. That U.S. based platinum recycling company, if it traded in line with the multiples of its peers, is a very valuable business that would trade at very high multiples in the whole green energy euphoria.
But again, it's a conglomerate, so it may never trade with the same multiples. And with
Yeah,
Sibanye, the other thing that I think is very relevant is geopolitical risk. I have no clue what's going on over there,
yeah.
and it's highly volatile. So,
Well, the thing about the
um,
geopolitical risk is that all the platinum miners are in South Africa because that's where all the platinum is. Except Sibanye-Stillwater has this mine in the U.S., which they've now brought on to half capacity because it's a high-cost mine. So if all of South Africa goes into trouble because of geopolitical risk, then Sibanye-Stillwater has the North American asset. But yeah, the only cure for the conglomerate discount is probably a spin-off, which some companies are doing, and with higher interest rates, spin-offs have become more popular. So you have General Electric splitting itself up, XPO Logistics split itself into 7 companies. So that is probably the only hope someday for a multiple re-rating is to break the company up and spin things off. Otherwise, you've always got that multiple discount. But all right, after Sibanye-Stillwater we're talking
I
about
think BTU.
Peabody
Yeah,
Energy and then Equinox Gold.
it might be more relevant to talk about Equinox first.
I can I can get on board with that.
I like that upwards consolidation that we're seeing. So yeah, since March, it has had a pretty nice run up, but I mean, with both factors of production coming online at their Green Ridge and gold being at 2,700, you would think this would be higher,
Yeah,
right? But I think it ended up being a whole bunch of sell the news on their first gold pour, right? But they're gonna have the tailwinds of production hitting their income statement sooner than later, right? So I think that gives a lot of potential to this stock, and it hasn't fallen and completely lost all of its gains. It's consolidating, and that lower lower low back in August might be a little concerning, but look how since then it's been bouncing off of its 200-day moving
Yeah,
average.
which
So
it just hit both the 200-day and the lower Bollinger Band, and is might be on its way into a little up rally at the moment.
yeah, so if it can get back above its 50-day and continue rallying, I think this has all the fundamental setups to, break out. It's got this double top around 640, and that would be a range that, I would be cautious around. It may, if it triple tops, that'll be bad news, right?
Yeah.
A triple top is very bearish, but it also could, break out of that, and then it will be, off to the races because no more resistance.
Yeah, so if it breaks above the 640 level, you don't have any resistance until you get back to a couple years back.
Yeah, yeah. So I think, yeah, even looking at this chart, you have even a better picture at that upwards grind that I was talking about earlier. And that even could be, looking like a yeah,
Something like that.
yep, and that's what you want to see, and that could be, the start of another cup and handle as well.
I'm pulling out the crayons for amateur technical hour.
But yeah, I like this chart and the fact that it's, lagging its fundamentals. I think that's a buying opportunity.
Yeah, and then the big risk to this is if the gold price doesn't, the gold price rally pulls back, which is entirely possible. But you look at the two political candidates running for president in the U.S., and they both have big dreams of spending and printing.
Yeah, and also I don't know if you've ever lined up the two charts, but the CPI and gold literally follow each other to a T,
Yeah,
right? And when you cut interest rates and inflation goes up, gold is going to follow, right? So, I think short term, you can't rule out the possibility of a pullback when something's rallying this way. But I think fundamentally, gold is set to continue rallying.
but this is a bullish chart off of its 2022 November low, where it's been
Yeah, and
grinding
the
higher.
company has, successfully, got their operations going, and that probably was the biggest risk with this company for a while. So, yeah, this is something I like, and I even wouldn't necessarily mind. I mean, I don't think it's the best buy at this point. I'm sure there's some other names in our coverage that might be, more attractive current buys, but I think this is
Yeah.
a good opportunity to buy, and dollar cost average.
Yeah, this one. So unlike Transocean and so Transocean Medical Properties Trust, I'm completely full on. I couldn't add another share. Equinox, I could add to it. There's some room there. ACDC too, but maybe less so because I'm just so overweight oil anyway. Peabody Energy, the magical money machine that stopped working.
Even though that still is range bound, and if you see at 27, that's a pretty bad triple top.
Oh yeah,
From there. So it, this might still be the money machine. Just breaking out of that range. Might be time to sell.
yeah.
I
So
mean, you
that's
do have that golden cross forming, but it might not be material based on the way that the stock is looking. It failed to break out of its rally, right? I, the RSI is falling. It's back at 50, which means it could theoretically inflect here, but it doesn't really give much indication to that being what's going on. Um, uh, this, yeah, just flat,
yeah.
range bound. I think that's going to be the continuation of the trend.
Yeah. So this the Peabody Magic Money Machine, where you buy it whenever it hits the lower Bollinger Band and you sell it at the higher Bollinger Band. It could be back in play, game on, Magic Money Machine. Because if you had done that for the last couple of years, buy, sell, buy, sell. It just keeps on printing money for anybody who's following this thing every day. buys
And
the
yeah,
lower
that's
Bollinger
literally
Band.
the pattern it hit. I mean, you would have missed out on like a minute of gains, but if you sold at the top of that Bollinger, you bought it in September when it hit the bottom, sold at the, when it hit the upper Bollinger Band. Even if you sold when it hit the upper Bollinger Band at 24.25, it's likely going to come back down to that range.
Yeah.
So maybe the range starts moving a little higher, but um, this isn't looking like a huge growth story to me.
Yeah, well, they do have a massive growth project coming online in Australia. Um, but yeah, we don't have to get into the fundamentals. So I've written about the fundamentals of it. I think we've covered all of the large legacy positions, and out of all of them, Equinox you could add to ACDC. It's kind of mixed, and Medical Properties Trust we could add to, except the position's totally full. Nothing I could do
Mm-hmm.
there. And then things like New Fortress, Transocean. The charts are just so ugly. Vermilion, just ugly,
Yeah,
ugly,
I
ugly
would put all
charts.
those in the same, category of, good fundamentals, just poor sector to be in right now.
Yeah.
And, market loves momentum.
Okay. So, do we have time? Because I know you're on a tight schedule with earnings season. Do we have time to get into the marginal dollar? Actually, I at least want to look at Container Store. Maybe just the
Yeah,
four of them.
I could keep going for a little bit.
All right. So Container Store has had so much news happening recently, and the I mean, look at that. Look at that zigzag
Oh
and
my
that
God,
whipsaw.
but see, I see that and I don't like that at all. So look, we've been talking about strong resistance. Look at the way that it just keeps rejecting off of the 200. It
Yeah.
cannot hold above the 200 to save its life.
Yeah.
So that makes me think that this downtrend, once all this good news, stops coming in, unless they get bought out, this looks like it's going to continue downwards.
Yeah. Or who knows? Maybe consolidating.
Yeah, it may be, but I mean, look at, with three lower, highs. Uh,
Yeah.
I mean, there was I guess that a double bottom there at 8, right?
Yeah.
So it could continue, but my initial gut feeling is that's not a good sign.
So it's not a good chart. So there is one more imminent catalyst, and I think that's potentially within the next 4 weeks, and that would be a refinancing of their debt. And as far as getting bought out, they were not bought out, but they sold. I don't know if you've read the recent write up on this. They sold preferred stock to, it used to be called Overstock.com, but they bought the intellectual property of Bed Bath and Beyond, so now it's Beyond Incorporated, and they're going to do some sort of a cross marketing where the Bed Bath and Beyond stuff can be inside the Container Store stores, which is good because the Container Store merchandise I thought was kind of weak. I was buying it mostly for their custom closet business, but then the custom closets can be sold online through the Overstock and the Bed Bath and Beyond websites.
Well, my question to you is that if they're already pretty weak in their, retail merchandise, is adding Bed Bath and Beyond going to change that?
So Bed Bath and Beyond, the collapse of that business, I think it was mostly due to there was two things. One was during COVID, when people couldn't go anywhere, all they could do was buy stuff, and then everybody had all the stuff they needed for years and years and years. It's been years and years and years now. And the other thing is the management team of Bed Bath and Beyond changed. So they knew they were in trouble, and so they rearranged the furniture on the Titanic. They changed the store design, and then people didn't recognize the place anymore. And they didn't like it, so they took away the stacks of fake towels that go to the ceiling and all that stuff. So I don't think it's the case that people don't like that stuff. And you can also buy all that stuff on Amazon, so there is that threat there. But I do think that there's going to be some improvement to the foot traffic in the store and the online sales. It's really about how to get more people into the stores to sign up for custom closets.
Yeah, I just feel like, we've kind of seen this happen with other companies and maybe, different situations. But if you're not, you're spending all this money to, have this partnership and whatnot, right? If it's not your core competency, which is their closet business, why does it matter? right? I think it sounds better on paper than it might actually perform. If people already aren't going to the Container Store to get, Tupperware or whatever, I don't think they're going to go there for towels. They're
Yeah,
going to go there for closets.
I think that's a very, very good point, and I am listening to you, Mitch. Um, so the last quarter was terrible, but for the 2 years before that, so to be in this consumer Armageddon, and to have 2 years of positive operating cash flow and growing organically through that was very impressive. So that tells me that and also ties into the K-shaped economy. At the high end, their custom closet space is going to be in high demand, and that's going to accelerate with any unthawing of the housing market, the existing housing market. With cutting interest rates, that's kind of could be very imminent. And then on top of that, one thing I learned about them recently is that they're vertically integrated. So I think years and years and years ago, they bought a European custom closet hardware manufacturing company called Alpha, and that's really the quality leader in the whole space. And so the selling the Alpha products on the Overstock website actually could drive some serious EBITDA and make an improvement to the company. And then also just the risk of having the debt situation resolved. So I think there is some promise here.
Yeah, I agree with you there that, like you said, uh, being able to market their core competency on Overstock, I think that is going to be more creative. We were talking earlier about, mergers and acquisitions and all sorts of deals. The hardest part is, integrating them and them actually being accretive to earnings. I think that, a deal like that where they're, expanding in the closet, business rather than the retailing business, that, could be something of value. And the fact that, they could market, their high ticket items on uh, Overstock. I think that could be bullish, and the debt restructuring. That's going to depend on what sort of terms they get. Are they favorable, or are they getting screwed?
Yeah. So, but until then, terrible chart.
Yeah. I mean, I think you could trade the chart, but this isn't where I would enter for a long term position.
Yeah, if it comes back down to this resistance level at $8, it's that's probably a pretty reasonable buying opportunity.
Yeah, that I agree with that.
Okay, and then what else? Container Store had a request just to see if the technicals had changed at all about Cardalytics. The stock price has been moving up a tiny bit in the last 2 weeks. Is that the 1 year? Yeah, so it's
Yeah, I mean, it looks pretty similar to the last time we saw it. I mean, it's good to see that it's above the 50 day. That's at least a start, right?
okay. Some
But
green
there's
shoots.
there's no real indication that it's gonna, break out of this range. It's at the top of its Bollinger Band, and the RSI is heating up. I think it might be setting itself up to, pull back and continue consolidating. It looks like it's starting to build a floor there around a little bit above three. So, maybe there's oh,
Hold on. I've got a mouse with too many buttons. I think I went backwards accidentally.
yeah. So this is something that I would still want to see further confirmation, and you're not really going to be doing yourself a disservice, missing out on a little bit of the gains. You know, there's no real indication that this is, this was the bottom.
Okay.
So
No
yeah,
urgency.
no urgency.
Doug and Portillo's.
So we've been talking about, when these companies in uptrends, dip under the 200, and it looks like that's what's happening right now,
Okay.
right? So it could be a buying opportunity for sure.
It's spending a
Could
little too
you?
much time under the 200.
It's I'm not necessarily concerned by that because you still have the 50 day above the 200, and the RSI is, it's gaining a little bit of relative strength. It's not continuing to fall. I think I think it doesn't look like it's imminent to catch a bounce here, but I wouldn't be surprised. I mean, it held up that support at looks like $1.05 pretty well, and it bounced there on the other, in September. That candle, it went down and bounced.
Oh yeah,
Yep.
is that the
So,
hammer candle?
that this could be, support. I would watch it here. Maybe this isn't, as actionable of a buy, but I like buying things when they're, under the 200.
Okay.
But it could, if it is to break under it, I'd say, $1.40. It's got some, between $1.40 and $1.30. It was consolidating last, so maybe that range. But uh, I don't think it necessarily is gonna fall too much further.
Okay.
So that's something I wouldn't mind buying at this point.
So we could still add to Doug here.
Yeah, and yeah, this looks good too. It's a similar sort of chart, except it's staying above its averages. But yeah, you got that golden cross. The RSI is cooling down, so this can rally at any point.
And I'm gonna have to zoom in a little bit, but even intraday today, it fell below the 50-day, but it closed above
And
it. So
recovered.
it's made
Yeah,
that hammer to stay above the 50-day. So I mean, this could be,
yeah. This is a strong buy to me.
yeah. So golden cross, it's staying above the 50-day. The 50-day is rising.
Yep, and you've got the given that it doesn't fall through the bottom here, it's a slightly higher low um from the September pullback.
Okay. Yep. I see
So
that.
yeah, I think this is a strong buy,
Okay.
and
So
I could do maybe like two or three more, and then I'll have
um,
to get going.
okay. Do you want to let's see. I had a request for Metafast and Titan Machinery. So Metafast, I did not start a position in. I started a small position in LifeMD. Metafast, oof, this is
Yeah,
so
bombed out.
yeah, this is really. I mean, the chart as a value investor, I get excited here. When I wrote about it, I couldn't convince myself because I wanted to buy LifeMD more. Metafast and LifeMD engaged in a partnership. Metafast is a multi-level marketing company where they get people to sign up for a 6-month service where you get coaching, you get some packages of nutritional supplements in the mail, and now with the partnership with LifeMD, you're going to get an app on your phone that connects you to a doctor that prescribes you your semaglutide weight loss drug. So I think that people that think that the drug is going to solve all their problems, I think what we're hearing back is people that haven't changed their lifestyle, they just gain the weight right back. So the idea that you're not going to need lifestyle coaching on how to live a healthy life, I think the stock might be really oversold on that. I think their service might still be needed, but their multi-level marketers are having a real tough time selling. So the reason why I like LifeMD with the partnership is even if Metafast doesn't pull it off and doesn't recover, just having 30,000, gig economy multi-level marketers out there signing people up for LifeMD. LifeMD is this tiny company that's going to be a huge beneficiary of this massive volume coming in from Metafast. So I like LifeMD better.
Yeah, I
Um,
agree with you there. And this chart kind of reminds me of like something like a, teledoc, right? Where it looks like it's, so bombed out and it's got to come back. It's got to come back, right? But, oversold could just keep on selling down. Like, remember with Carvana, that fell all the way from, like 200 to 4,
yeah,
right? So I would also, wait until there's some sort of inflection because this is showing nothing, right? Wait for some sort of catalyst, some sort of, um, some indication that things are working out, things that are turning around. And if all else is equal, and Medifast's success is going to equate to Life Med's success, I think that might be the better stock to own.
yeah. Because I like LifeMD even if Metafast fails. I actually suspect Metafast is not going to fail because I think people are underestimating that they're going to need coaching. And also the whole Ozempic Wegovy thing, it's creating this market for nutritional supplements. And so Metafast bundling their nutritional supplements in with their whole coaching package, And
Yeah,
once,
I do like that, but
yeah,
um,
and then once Ozempic and Wegovy are all covered by insurance, it's not coming out of pocket because people are paying $1,000 a month for these drugs. And
yeah,
Weight
and
Watchers,
more
um,
drugs are getting developed. I think, that whole space is starting to get really saturated.
yeah, Weight Watchers came out with a $180 a month version. But then Weight Watchers is much more of a direct competitor to Medifast. So Medifast solution was to partner with LifeMD, have the prescription through your phone, have the drug shipped to you, have it all integrated with your insurance. Whereas Weight Watchers is like, we'll just give you the drug ourselves, which I think is kind of interesting. But yeah, it's
So
I
I am
chose
not in a
LifeMD.
rush to buy this stock. I don't think there's any sort of urgency here.
Okay, and then Titan Machinery. So Titan Machinery, this is one that I have a small position in. Used to be a much bigger position. The farmers, you guys saw the price action on cocoa that went to the moon because there was a
Yep.
crop failure in cocoa. We've been years now without a major crop failure in a staple, and so farmers, the prices they've been getting paid are low. You need a crop failure in some staple for the average price of all the other farmers to make lots of money hand over fist. And so they're not going to Titan Machinery to buy new tractors without having that action happen in the agricultural commodities, and the agricultural commodities are all still cheap. So I think Titan Machinery, from a fundamental standpoint, it might be at least a year away from wanting to buy. From a technical standpoint, though, it does look like some nice things are happening since September, but who knows how long it's going to last.
Yeah, I would want to see it, continue this trend before I call it a real, breakout. But it's good to see it, trending up a little bit, maybe, starting to break out of this downwards consolidation.
Yeah,
But like you said, fundamentals might be a year away, and it's a little bit of a gamble right now to buy this and think that this is going to be, the rally. It might continue to, have lower highs and lower lows. I think this rally is going to be a good one to watch, and maybe if it breaks above like 16, that could be a good indication that this thing is actually turning around. But you need some sort of fundamental turnaround or catalyst, like you were saying. And if people aren't buying their equipment, I'm not buying the stock.
yeah. Well, uh, so the nice thing about the company, from people who are not into technicals, that they're just cyclical investors, value investors. The next time that farmers have cash to buy tractors, this stock is going to be at least $35. Now, whether that's in 2 years or 3 years or 4 years, I have no idea. But that it's a 2.5x from here. So if that takes 3 or 4 years, that's still a fantastic return. So if you want to be completely agnostic to all technicals and just say, you know what, $15 for this stock is cheap, because the next time business is booming is going to be $35. I think
Yeah,
that's a totally reasonable way to do it.
yeah, and if you were to get into it today, so around $20, you have both the 200-day moving average, and that's where the stock last gapped down to back in June,
Yeah,
right? So, I would look to, in the near term, if you're trying to, play a rally on this, but it doesn't, I don't think it really has the momentum to necessarily carry it to, to go that high so far. I mean, something would have to change,
yeah,
in my opinion.
and I whittled the position down pretty hard because I wanted to redeploy the money into other things that I thought the catalysts were more near term, and also had a position not to be a three bagger but could be a 10 bagger or better.
Right.
But for the agricultural exposure for a company that's not losing money, that's kind of founder led, Midwestern salt of the earth. There's a lot of attractive things about this company that I like.
Yeah,
But
I
I'm
agree. I think just as you're saying, it's great agriculture and industrial exposure, right? They just need to, I think have some more industry tailwinds.
Yeah, and needs some more time to prove that this is really an uptrend and that it bottomed in September.
Yeah, because it just as easily can pull back and not look so good anymore.
Yeah. All right. Um, all right. So that was all the requests from Twitter and Substack, and there's still a lot of things to look at and a lot of things to So as far as where to put the marginal dollar for the next couple of weeks, still Portillo's, still Doug, probably still Finance of America Corporation, probably still what was this one?
SPRY
Yeah,
and
that's the
AAOI.
epinephrine nasal spray,
Yeah,
and then even though
they've been rallying. Both of those companies have been rallying
yeah, Applied
this last week.
Optoelectronics,
Yeah.
and
So
I think Burford Capital might be starting to exhibit some positive momentum here, or might be ready to bounce off the top of its band. Um,
yeah, I mean that looks pretty flat to me, just up and down. This is another one you could just play the Bollinger Bands on. Uh, I'm not convinced this looks like a breakout. You still
yeah,
have the 200 over the 20-day. It's at the top of its Bollinger Band. It's heating up on the RSI. Um, yeah, I think I do like the fundamentals of this one,
yeah.
but it looks pretty range bound to me.
I feel like once this one gaps up, I'm going to be kicking myself that I didn't buy more, because the theory that I've heard for why the price is not responding is that this large Argentina lawsuit that this company's probably going to get about $1 billion from. You can't really compel a country to pay you, and nobody knows when it's coming. So, and also probability-wise, nobody knows how to weight it. So it just kind of breaks all the analyst models, and nobody knows how to value it while there's this $1 billion payday from a sovereign government. That's one theory I've heard for why the price is not responding the way it should. And once that's behind them, then it can just go back to a traditional aggressive growth story with a totally uncorrelated return.
So if that's the theory on this one, I'd say just every time it hits the lower Bollinger Band, maybe dollar cost average a little bit.
Yeah. So this recent rise is not really proving anything. It's made me feel better when I look at it in my account, but it hasn't. It's still, the most likely course is it's gonna, follow this range bound pattern until the news changes, and then
Yeah.
it could possibly gap up to where I wouldn't even want to buy anymore. Although that's probably the time when it's still a good buy, but the gap up could be pretty fierce.
Yeah, I mean, the only way I would change my mind on this is if it rallies and holds above the 200.
Which is over 14.15 here.
Yeah, so that's definitely not out of the ballpark, right? It could just have, another good week and then be there.
Yeah.
But based on how it looks right now, I think it's more likely to pull back or even hit, 1450 and then pull back, you know. Um, so I think there might be more opportunities with this one to build the position up.
Okay. So that's it. The marginal dollar still Portillo's, Finance of America, Doug, the epinephrine nasal spray, and Applied
And you might want to
Optoelectronics,
take some lottery tickets on UEC.
and UEC. Okay, yeah, I do have a small position there, um, because I've been focusing on energy fuels. So I could add more. It is pretty small. All right, so I think we've been talking for quite a while now. Thank you very much for
Yeah,
your
I gotta
time
get
during
going
earnings season,
anyways.
Mitch. I know
Yep.
that you've got a tight schedule and you have to listen to so many earnings calls. So thank you for joining me.
Yeah, thanks for having me.
All right, and we'll catch up and do this again in 2 weeks. Have a good
Yep.
one.
You too. Goodbye.